Yeah, again, thanks for joining today. Our first session was on pricing and profitability, kind of built the building blocks of how to think about pricing, how to maximize your profit, understand your costs, understand your overhead, understand your cost rates, your billable rates, give you some confidence, hopefully, in setting those billable rates and making sure that you're that you're maximizing your profitability. So now that we know that, we're going to move on to invoicing and payments. This is something that I am excited to talk about because I personally love getting paid. So hopefully this will help everybody feel a little bit more confident in what they're doing in Materio, how they're invoicing, how they're using the different documents, and so forth. So just to recap again, um, pricing and profitability was a couple weeks ago. If you missed that, please email me at cale@materio.co. I'll go ahead and drop that in the chat and let me know if you'd like me to send you the recording and the slides and the calculator to help understand your markup and margins and overhead. Basically, we want to drive down costs, maximize profit, and make sure that we're running everything through the project so that we can uh, make sure that we're getting all the markup and margin on everything and not letting other folks benefit from running those parts of the project. So now that we know how to price things, we're going to talk about invoicing items. So we're going to go over some common mistakes that we see here at Materio, some things that I run into. I looked into the chat history and came up with some parts or some things that we see a lot. And what we're going to do is talk about the different tools that we can use for receiving payments and requesting payments. And then touch a little bit on the QBO Sync. We're not going to go into depth on that just because it is a little bit of a can of worms and pretty in depth. I would love to get in the weeds in that on that subject. If you want to reach out to me and get more into the QBO Sync, we can definitely dive into that. That's kind of like my forte. And then we're going to talk about best practices, and then we're going to demo some of the things live that we've learned, and then we'll jump into a Q&A. So with that, we'll go ahead and start talking about the common mistakes. So one of the most common things that we see, or at least that I see, and what I hear, are that people are using the wrong document. So we have invoices and retainers and deposits and credits that we can collect money with and use for payment, but we sometimes get the terminology confused. We want to really lay a baseline of what the different tools are for. And so we're going to start with that. And then next, I want to talk about manually entering lines on invoices, because this is something that we see quite often, and it's kind of a shortcut and we want to avoid it. But whenever you create an invoice, you have this option to create this other line item, and it's just something that you can type in, and it's not tied to anything in the scope of work. So when you get to the end of the project, you have this money that came in, but it's not actually tied to anything in the finances tab and the performance tab. And so it doesn't look like the couch was paid for, even though you manually typed in couch. So we want to make sure that we avoid that. The next thing that I see are when there are pricing fluctuations that happen. A lot of times this is due to shipping coming in after the fact, after you've already invoiced and you're not sure what to do with it. It can cause some discrepancies, whether you got paid for that or not. We want to make sure that you're getting paid for any of those pricing discrepancies that go up or down. And you can also eat and absorb the pricing discrepancies in your favor. So if prices go down, you can always absorb that and not pass that on. Lastly, the number one thing that I see when things aren't working well with the QBO Sync, it's due to things getting adjusted directly in QuickBooks. So one thing that I want to make sure that you take away from this, if you are using the QBO integration, which I highly recommend using, is that treat Materio as the system of record, the source of truth. That is the input system that goes into QBO. If you manipulate things in QBO that have to do with your invoices and your deposits and retainers and your credits, those adjustments will lock out and have errors because you'll have discrepancies between what's in QBO and what's in Materio. So always adjust things in Materio and let that flow down to QBO. And Isabel, about the shipping, we don't want to add shipping manually to the invoice. What we want to do is we want to add shipping directly to the item itself, or create a line item in the scope of work that says shipping, and then pull that line item or pull that additional amount onto an invoice so that that's tied to the actual scope of work or to something within the project. If we type that in manually, then that's just going to be hanging out and not be tied to anything. It's going to go into QuickBooks as uncategorized income. Your bookkeeper is going to reach out to you, ask why you did that. And so best practice is to always adjust prices on the item itself, or create a line item in the scope of work and pull that line item onto the invoice. So having said that, let's go to our, this is our baseline. This is the ways that we receive money in Materio. And this may seem a little bit elementary, but I want to make sure that everybody has a good understanding of what the documents are, what these financial instruments are. And so first of all, we have the invoice, and all the invoice is a record that a transaction happened. It's similar to when you go to Target and check out, you get a receipt. It's the same thing as an invoice. You sold something, you sold it to this client, you are the seller, they are the buyer, they paid you this money, and this records it, and this is the legal document for that. Retainers and deposits are very similar, but they have some really big differences. So a retainer is a general prepayment, meaning that somebody has given you a sum of money, and that sum of money can be used to pay for anything in the project. That can be used for your design services, any hourly billing, any products or other services. It's basically like a gift card. You can use that retainer to pay for everything. Where a deposit is another prepayment, but that deposit is earmarked for specific things. So if you create a deposit, the deposit's going to ask you, what is this deposit for? And you have to say that this deposit is for the design services line item that I have. It's for the custom couch that I have, and it's for the chair and the ottoman. And so that money is held and can only be used to pay for those items whenever you create an invoice. And we'll kind of go into the workflows of how that looks here in a minute. But just in a general sense, just always remember that a retainer is general funds and a deposit are for specific things. And a credit is money that is owed to the client. So that can be due to price fluctuations downward. That you can have a concession that happened. Maybe you missed the deadline and you need to offer a $100 credit to the client to kind of smooth things over. Those are funds that can be entered and used as payment for future invoices. So that's pretty high level overview. So let's dive into what an invoice is. So as mentioned, it's just the official document of sale. It's when revenue is recognized. And what that means is if you're on accrual-based accounting, that is when your income is recognized. If you're on cash accounting, that is only when you receive the funds, but we're not going to get into the weeds on that. But generally, most folks are on accrual-based accounting. So whenever you create an invoice, that's when the sale happened. That's when the revenue happened. And this is important for reporting purposes and tax purposes. So if it's December 31st and you send a $100,000 invoice, your income for that year is boosted up $100,000, even though you may not have received that $100,000 in that year. It may not pay till January 1st. Well, if you sent that invoice on December 31st, that's when your revenue is recognized. And also that's when sales tax liability is triggered. So if you are have something on an invoice that requires you to collect sales tax, when you create that invoice, that's when that sales tax is logged that you collected it, and that reporting period of sales tax is going to be that invoice is going to include it in that period of sales tax reporting. And so we have four things that can be put onto invoices. The first are scope items. Those are the scope of work. You can have, your design services, any type of general requirements, any products and services that are in the scope of work. You can have your expenses, like billable expenses, any incidentals, any like thing that you want to pass on to the client. You can pull those onto an invoice. And then also you can invoice for your time. So if you are charging hourly, you pull your hours onto an invoice and can charge the client for those hours. And then lastly, this is the thing I mentioned earlier, the other line, we want to avoid this. This is where you can enter something manually. And this is like a kind of an escape hatch. If something just goes bonkers and you need to like kind of patch something up, you can use this, but we want to avoid that at all costs. And so when do we use an invoice? We use it whenever we sell something, and we can use that at the beginning of the project, in the middle of the project, at the end of the project. We can request funds. That's when we actually make the sale. And what can pay an invoice, or you can have cash to pay an invoice. You can pay an invoice with a retainer. If you had a deposit item and put that deposit item on an invoice, you can pay it with the deposit funds. If you have credits that are on that project, you can pay with credits, credit cards, wire transfers, bank transfers, all of that. And typically this is matched with whatever is written in your contract with the client. And so now we're going to go on to retainers. And so we've got retainers listed here as with an icon of a wallet with some money in it, because you basically are holding on to your client's wallet with their money in it. It's not your money just yet. This is you're holding on to the client's money. So this is very flexible on how it's used. As I mentioned earlier, you can use this to pay for anything down the line on the project. But this, opposed to an invoice, this is not considered revenue or income. If you take a $100,000 retainer on December 31st, that does not affect your income on that fiscal year if you're using accrual accounting. So this is the same thing with sales tax liability. It doesn't affect that until you pull that money onto an invoice. And so here is just kind of a visual of what that looks like of the retainer request. That's the official document. Whenever you receive those funds, those are considered held funds. And then once you create that invoice, that's when that money becomes your money, and that's when it becomes income. And so this is a great way to protect yourself so that you make sure that you get paid. You can move real quick to the procurement process. Once you get those retainer funds, you can control your cash flow, so you don't have to worry about maxing out your credit card or going out of pocket on items. Take that money up front and use that to your advantage, and don't go out on a limb for a client that may have some payment issues. So the difference between a retainer and a deposit, again, is that their deposit is for specific goods. So the icon here, the visual looks a little bit similar, but these have specific items on it. And again, similar to retainer, this isn't revenue. It doesn't trigger sales tax liability. And what it does is same thing as far as getting protection up front. You earmark money for specific items. And you can see here that these icons, again, are very similar. It's just that they are for specific items within the scope of work. So again, great way to make sure that you always get paid. Always recommend that you build your SOPs, your standard operating procedures with retainers and deposits as a way to protect yourself. And you can actually use retainers and deposits together. So an example of that is having a design services portion of your contract with the client to where you take a retainer up front. Let's say that you take a $10,000 retainer for a large project. You get that money in hand, you build out the scope of work, you build out your presentation on the boards, you present that to your client, then you can invoice the client and get that money from retainer to your earned income money, and then move on to the client's approvals for everything within that scope of work that you just built out. And then you can request the deposit and get money up front for all those items within the scope of work so that you're not fronting any cash up front. So get that money, then go into the procurement process, put that on an invoice after everything is installed in the client space, and then close out the project, and that's when that money becomes your money. So those are the ways to receive money and earn money in Materio. And next we have the credit. So credits are a great way to make sure that we are transparent with the client on any money that is owed. Um, we definitely recommend doing this opposed to just moving a price down, like discounting a product. Create a credit so that you have a document of this. You can name it whatever you want to name it. As I mentioned earlier, if there's a special circumstance where you want to give your client just an offer of goodwill, you can do that and you can document it. They get notified. They say, hey, you have this credit for X amount of money. It's for XYZ. And that can go a long way. And so next we'll talk about best ways to receive money. There's a couple ways to receive money in Materio. The first is using Materio Pay. That is the cleanest, most integrated way to process payments within Materio. So what that means is you can accept bank transfers or credit cards directly in Materio and not have to use any outside platforms. We launched this early this year and we've had great response. People are really liking it. Our accounting partners are really happy with the way that it reports things over to QuickBooks. It takes a lot of manual work out of their hands of reconciling multiple systems. This also helps match invoices in QuickBooks. We also support Stripe. One note on that, Stripe's making some changes, and we're going to be sunsetting support for that later this year. So we can still support that. It's just that it will have to be processed outside of Materio after October of this year. Lastly, you can process any type of payment processor outside of Materio. Whenever you do that, say you're using QBO Payments or Bill.com or Honeybook or any of those other payment processors, they all have their strengths and weaknesses. But what happens is you have two systems to keep up to date because you'll have to receive money in one system, then mark it paid in Materio so that Materio is aware that that money was received. Same thing with cash. You'll have to mark that paid manually in Materio. So now that we know how to request money, how to receive money, we're going to talk about what it looks like in QuickBooks. So again, Materio syncs really well with QuickBooks, but I want to emphasize that it's a one-way sync that pushes information to QuickBooks. So as you make changes in Materio, we update QuickBooks. If you delete a document in Materio and you're connected to QuickBooks, we're going to delete that document from QuickBooks. So we stay synced with QuickBooks, but whenever you make those edits in QuickBooks, those do not swim upstream to Materio, and that's when we have those sync errors. So I want to emphasize Materio writes to QuickBooks, but QuickBooks does not write to Materio. So just if you ever have any questions about that, please reach out to me. I am happy to map out all the accounts with you and make sure that everything's syncing correctly. And as far as we got a question in the chat about fees with Material Pay. Yes, there are processing fees. You can choose to shoulder those fees yourself, meaning you can absorb those fees and incur those yourself, or you can pass those on to your client. The credit card fees are 3.2%, with Amex being 3.8%, and the ACH fees are 0.8% with a max of $20 per transaction. So if you have a $100,000 invoice, it's going to be a $20 max transaction fee for that. And what happens is we will take that money out of your deposit, and if you're linked to QuickBooks, we'll automatically record that fee in QuickBooks and take care of the accounting side. So it syncs real nicely with QuickBooks, and we take those fees, so you don't have to worry about accounting for those. And so just back to best practice. One other question on Material Pay. There is no additional subscription fee to use Material Pay. Once you're approved, you're live. You go straight to processing payments. It takes about a day to get approved. Once you get approved, there's no additional fees. There's no gotchas. There's no hidden agenda there. Just the 3.2% for credit cards with 3.8% for Amex, 0.8% for ACH with a max of $20. So those are very competitive rates. I heard that QuickBooks is way more than that these days. So if you're looking to get on something that has a standardized fee schedule with no hidden things, definitely go to your invoicing page and click Materio Pay and apply. So best practices, I'm just going to rush through those. We're running short of time because I want to show you some things in Materio. So collect 100% upfront, manage everything in Materio, avoid those manually keyed items, write those SOPs. I'm happy to sit down with you and write those out with you, like build that out with you, and then use Material Pay, get that integrated into your system so you don't have to worry about processing fees and processing things in multiple systems. All right, so now I'm going to jump into the live demo. Apologies, I'm going kind of fast here. So I'm going to do a deposit first. So here we have just a design project. It's about a $40,000 project. If I want to take a deposit, I've already built out the project. I don't have any approvals yet. I still need these approvals, but what I can do even before I send this to the client, I can go to the finances area. I can scroll down and go to new deposit. And from here, I'm going to choose the client. I'm going to pick Mr. George here. I'm going to call this the furniture deposit and just say thanks for your business. And from here, for the deposit, I'm just going to add deposit items. I'm going to scroll down to my furniture area. I'm going to hit add all and next. And here you can take either 100% deposit on the furniture, or if you want to take a percentage of that, you can use this slider to take a percentage of the deposit. So if you want to do a 50% deposit up front, you can do that easily in Materio. I'm going to go ahead and do 100%, add to deposit. So now I've got all the furniture in the project. One thing that not sure if everybody's seen it or not, you can now format the invoice to show everything in a very streamlined way. So I can organize everything by location. So I have the dining room and living room here. We've got the items separated by that. If I want to collapse and just have dining room and living room, I can do that as well. So once you do that, and then here's the Materio Pay option for the fees. It says, 3.2%, 3.8%, and there is a 30 cent fee per transaction. Apologies for omitting that. You can turn off credit cards if you don't want to allow credit cards to, if you don't want to deal with credit cards and just have the ACH, you can allow yourself to cover that or have the client cover that. Once you send it, that will get sent to the client. What that looks like is the client will get an email that looks like this. It'll say that there's a new deposit request for them. They'll be asked to click on this. Once they go in, they'll be sent to this page. They can hit pay now. They'll enter in their credit card information. They'll hit pay. And now that is a paid deposit. So let me close out this and go back here. So now it says sent. Since I just paid it, I'm going to refresh it. And this now shows paid. So now that I have a deposit for that furniture, let's say that I want to go ahead and invoice it. I can invoice it by going to new invoice. And from here, I'm going to add invoice items and oops, did not mean to click that. New invoice items. And I'm going to do project scope. I'm going to scroll down to the furniture. And here, these little bars are green now because I have the deposit funds. So everything else is gray, meaning I haven't received funds for those. But since I have received funds, I have an indication here. So I'm going to pull those items onto an invoice. I want to invoice for 100% of them. If I want to add more items, I can add more items. If I have hours logged, I could add hours here. If I have any billable expenses, I could add those expenses. But notice that the deposit was automatically pulled on here. So since that deposit was already pulled on here, it's already used this payment. The thing that wasn't the reason that there's a balance on here is because I have a shipping and warehousing fee. If I want to turn that off, this invoice is considered satisfied. So I now have a satisfied invoice. I can send that confirmation to the client and say, I've used these funds to pay for this invoice. So we got a question about if prices have changed from the time that we pulled an invoice to the time that we pulled a deposit to the time of invoice. And that's a great question. Let me see here if this is the right one. So I have a deposit here, and and this is an example of prices have changed. So if I go to new and invoice and go to add invoice items, project scope, I'm going to go down here. And so notice here that the prices have changed a little bit because this price went down, and it says that I owe money here is because the price went down. And this dining table shows partially paid, 85% paid. So if this happens, we have the deposit, now we're invoicing. We're going to add all those items to an invoice and hit next. Again, this shows partially paid. We have $218 left to invoice for this. So I'm going to hit add to invoice. Now we have applied that deposit, but we do have the additional amount for this dining table that is due. And then let me see, I think we have a credit due here. Yep, so we have a credit due because something went down. So I can apply that credit by hitting that plus button, hit apply, and now I've applied the credit, I've applied the deposit, and now I have just a remainder balance of $635.12. So this would be a good example of some prices have gone up, some prices have gone down, and I have a final invoice to send to the client. And then a question here about shipping and warehousing. Where did that come from? Great question. So this is a fee that I added onto this project based on our conversation in our last session about pricing profitability. I have put a 10% shipping and warehousing fee on this project. So this applies to all my invoices. If I did want to charge that, I could turn this off and then I would have a credit due. But if I wanted to hold tight to my contract that says I'm going to charge 10% shipping and warehousing fee, I'm going to include that on this invoice. So that's not included on the deposit, but that is included on the invoice. So I've got, just to recap, I had a situation on this where I took a deposit without knowing for sure what I was going to purchase. I had received the deposit money. Some things went up, some things went down, and now I am applying the deposit. I have some credits due, and then I have a little bit of a balance due, and I can send this invoice for final payment, and the client can come in here and I can choose to allow credit cards or ACH. And I can send that, and now the client gets notified that there's still a little bit of a balance due on this invoice. And the fee does have to be set up per project. And the way that that is set up is you go into your scope and you click on this grand total area down here. And here's where your fees are. You just click edit fees and you can delete a fee, you can edit the fee, add the fee here. If you want to call it a management fee, you can charge 20% or whatever you want. And then that will be tacked on. Every invoice will have a 20% surcharge along with any other fees that you have. And like that invoice I was just on, you have the ability to toggle that fee on and off once you add something to the invoice. I'm just going to add some stuff here and show you what that looks like. So now I have that shipping and warehousing fee, and I also have the management fee on there. So this is a project level fee that gets tacked on to each invoice. All right, I know we're over time. I have a few more minutes. If anybody has any questions, I'm happy to answer them. If not, I appreciate everybody showing up today. I know that finances aren't the most luxurious thing to talk about, but all right, we got a question here. Can see what changes are made after the payment. Yeah, so the question is there a way that the client can understand where the credits came from and what has happened after the fact? So what the paper trail here is that this invoice here had that credit here, the 625.26, and this created a draft credit based on me creating that invoice and having that credit due. So what I need to do now is publish this, and that will allow the client to have visibility to this credit and understand that the credit came from the deposit on the sofa, and they can see originally that the price was supposed to be $28.73.75, and then it got moved downward to $23.01.43. So the way the client can understand what happened is typically through the memo area in the invoice or the credit. You can give some additional context here before you send that off. Same with the invoice. You can add a memo and let them know what's going on. But otherwise, the official documents are going to say that this invoice was for this credit was for this. And if you don't explicitly connect the dots for them, hopefully they can connect the dots with the published credit and the invoice here. All right. Any other credit or any other questions? When you sales tax. So the way that the sales tax works is that we actually create a credit for the sales tax as well. So as soon as you publish the credit, we will amend the sales tax liability as well. If you're synced to QuickBooks, we will sync that information over to QuickBooks, and it'll reduce your sales tax liability when you create that credit. And then the question is, there's something in the works where employees' time can be easily transferred into material for billing. We don't enter twice. Okay, so not just yet, I don't believe. Let me just go back to the question was, can we import time entries? Not yet. But that's a great idea. What I can do is take that suggestion to the product team and see if there's something that we can put on our roadmap so that we can, you can upload a CSV of time entries and get that into your billable time area. So Shelley, thank you for recommending that. It's a great idea. All right. Any other questions? Happy to answer another question, or we can close this out. If not, thank you again. Hopefully you walked away with something valuable here. Happy to chat more and get in the weeds. Email me at cale@materio.co. Always happy. This is my nerdy area. So always happy to talk more finances and debits and credits and all that good stuff. So thanks again. Have a good rest of your week. Have a good weekend, and hopefully talk to you soon. Reach out if you need anything. Bye.